Good afternoon, investors. It's Christopher Mullen from AlgoTrades.net. Just want to do a quick update on the overall market analysis or the market trend, and along with the AlgoTrades analysis. Now, if we take a look here, you can see we are on the SP 500 contract, 30-minute chart, and we've zoomed back all the way back here till really July, all the way till February, where we're at today. Now, really the second half of last year, we saw the market start to become a little more choppy with some very strong rotations. We saw the trend nicely bouncing up, and then we got into the sharp correction where the market sold off, went straight down, really a couple days straight down, found a bottom with a little bit of chop here, and then rallied straight back up into an uptrend. And then eventually it did the very similar price action where it went straight back down, came straight back up. When you get these strong reversals where price really just free falls and then rallies without any real kind of consolidation or pause, makes it extremely tough to get involved, and naturally you're going to get whipsawed with losing trades as the market keeps flipping direction, because we tend to trade with the overall trend, and when the trend changes direction, if we happen to be in a trade, then we get stopped out. So that's kind of where we're at. We've been in this heavy rotation, and really you can see both these rallies that have recovered. Of course, the one in October was massive. You get these runaway market conditions where the market just runs away, keeps on running higher and higher, never gives you a chance to really get in with, unless you had to just jump in and buy and hope it sticks and continues to go higher. But generally that is not a winning play. We don't just jump into the market expecting it to go higher, especially when the entire time it's reading it's overbought and it's had such a big percentage move. You don't want to really take those probability trades. Not all the time it turns into a runaway market. We kind of saw the same over here where the market takes off, runs away, and then finally starts to give us some chop with some potential trades, which we ended up catching a couple small winners in here before the market turned back down. Now overall, looking at the recent price action since really December till now, you can see we've been in this wide range, this very choppy market condition where the market is flipping from an uptrend to a downtrend and keeps going back and forth. Now, the range here is fairly big. This is very typical of a major we're seeing some major distribution going on in the market. Typically when we see this type of price action, we see a major move happen after it, whether it's going to be a new leg higher, which is a potential move, or we're going to start to see a breakdown and we're going to see a bear mark slowly start to unfold. The question is, which way is it going to go? And really, until it picks a trend and starts to move, we're not really going to know that. Right now, we're getting mixed signals. As of this morning, the market has flipped back to neutral, telling us that momentum, money flow, cycle analysis, everything is kind of mixed, not giving us a clear signal where the overall strength of the market is. So of course we're sitting on the sidelines, and of course as it's been chopping around here, we haven't really had any trade setup, so it's been very quiet really for the last several months, but the last couple months just really hasn't been anything to trade. So if we zoom way back in the market here, let's just go way back to the 2011 choppiness in the market that we saw here. You can see here very similar price action when it comes to this chop. Now this is a significant, very similar. It took about 3 months. We're going to get to the 3-month mark in a couple of weeks on where the chop is now that we've seen since December. We are kind of really getting into the same, more or less it's taking a quarter of the year in the market to kind of consolidate and churn its money and pick a new direction. And we're getting very similar price action to here where the market just keeps chopping around, doesn't really give any real trade setups. Finally, it picks a trend, slowly starts to stabilize, and then you go into these really nice tradable trending markets where we can get in and out repeatedly with multiple different positions and building on positions, and same with the corrections. You start to get nice corrections where they have legs to the downside that are very tradable, and of course the same as we start to get these trades going up again. So that's what we're looking at now. Overall, I think we're going to be in for some pretty volatile times, probably for another month or two. Could even drag out a little longer than that. Hopefully we'll get some good trades sooner than later, but eventually once we get out of this month-long consolidation, we've seen this happen multiple times over the last several years, and you kind of go stagnant for several months, and sometimes the best play is just to sit in cash, let the market do its thing, and then once the trends start to pick up, the system will become active, and we'll be either trading to the long side or to the short side, depending which way the market decides to go. Anyways, that's it for this week. Hopefully that gets you up to speed on where the market is and where our trading strategy lies. Take care. Bye-bye.